Just a few years ago, I thought that becoming a profitable day trader or getting funded was something nearly impossible. Like you needed some secret strategies, decades of experience, or some fancy setup. But after 5+ years of day trading, I've realized the truth. The strategies that actually work are way simpler than what most traders think. It's not about having the most complex system or the fanciest indicators. It's about mastering 5 fundamental principles that most traders actually ignore. So if I was starting from scratch today, these are the 5 things that I would do to get profitable twice as fast. Hi, I'm Houman. I left my 9-to-5 over 10 years ago to chase a life of freedom. Since 2018, I've been traveling the world full-time while building various online businesses, and for the last 5+ years, I've been a day trader. I've been through the late nights, the blown accounts, the frustrations, and all the mental battles. And in this channel, I talk about what I've learned over the years and what I'm learning every single day. No hype, no courses to sell, just real talk from someone actually in the game every single day. If that sounds like your vibe, hit the like, hit the subscribe button, and let's get into it. Step number 1 is about mastering direction through reading candlesticks and the higher time frame bias. And this is where most traders completely mess up. They think that trading is about having the most confluences or lots of indicators on your screen. I've literally seen charts that look like Christmas trees. Moving averages, RSI, MACD, Bollinger Bands, you name it. But here's the reality. The more complex you make your process, the more confused and unprofitable you're gonna be. It's unnecessary information overload. The more that you put on your screen, the less that you're able to read what the candlesticks are telling you. So the first thing that I would do is to delete every single indicator on your screen. Yes, all of them. I know that sounds crazy and a little bit scary, especially if you've been relying on indicators for most of your trading. But trust me on this one. You need to learn the price action first, because that's what the market is actually telling you. And I would focus on 3 time frames: the daily, the 4-hour, and the 1-hour charts. And on each time frame, I would ask myself 3 simple questions. Is the market going up? Is the market going down? Or is the market going sideways and consolidating? So I just closed out this trade here, and I want to talk about what I saw coming into it. And as you know, the 3 things that I look at for every single trade is the direction, destination, and location. When we are looking at the price action on the 4-hour chart, we clearly see that we are in an upward trend, right? We are setting a series of higher highs and higher lows. The direction for the trade is clearly to the upside. I only want to be looking for longs. I don't care about these little retracements down. I don't want to be calling the top. And also when we are looking at the daily chart, we had such a strong daily closure on Friday. So coming into today, I don't want to be trading against this candle here on the daily. I want to be following that. A power candle in every time frame, more likely than not, is going to have a follow through. When we have such a strong body daily closure on Friday, more likely than not, that Friday strong body candle close is going to have a follow through to the upside. So that is my direction. And this is what I mean by learning the language of the candlesticks. You're not just looking at individual candles, you're reading the story of what the candlesticks are telling you across multiple time frames. And once you could do this, you will never look at the charts the same way again. Because whenever you're looking at the charts, you're not looking for little hanging mans or obscure patterns. You're trying to read the bigger picture. You're trying to read the story that the market is telling you. And when you can read the bias correctly, you're trading with the market instead of against it. You put the odds way more in your favor when you trade with the overall picture. Also, go check out this video that I talk about the secret language of candlesticks. Link is in the description. You're gonna love it. Number 2 is to learn destination. Once you know the direction from the higher time frame analysis, you need to then know where the price wants to go. And here's something that changed my entire perspective on trading. Price has only one obsession, and that obsession is liquidity. Think of liquidity like a gas station for price movement. Price doesn't just move randomly around the chart. It moves from one liquidity pool to another liquidity pool, like a car driving from one gas station to the next gas station. And once you understand this concept, you start seeing the markets in a completely new way. So where do you find this liquidity? It's actually hiding in plain sight. For me, I've simplified this into 3 key areas: important previous highs and previous lows, higher time frame swing highs and swing lows, and important support and resistance levels. Now, there are other types of liquidity like round numbers and psychological levels, but these three that I mentioned cover most of it. And that is more than enough. This isn't some conspiracy theory. This is just how markets work. Large players, like institutions and hedge funds, need liquidity to fill their large orders. So they push the price to these key levels where the liquidity is resting to grab that liquidity before making the big move. Now, the next thing that we want to know is, where is the destination? Where is the price likely to go to? When the price was having this pullback all day, right? This is basically the Asia session, and this is pre-London right here. As the price was pulling back here, I was thinking, where can the price go to? Where is the destination of the price action? And what do we have? We have the previous day high, right? That is clearly a level that we could be going towards. And also before the previous day high, I didn't like this strong reaction here on the 30 minutes. So as you could see here, we had this strong 30-minute candle, and then we had another follow through, but that candle right here did not have a follow through, right? We had a big, strong 30-minute candle that came right after that. So for that reason, I didn't really want to hold it all the way to the previous day high. I was more looking at this zone right over here for my destination. So once you start thinking this way, you stop calling the tops and the bottoms, and you start following the liquidity trail. You ask yourself, where is the next liquidity pool? Where is all the stops resting? And here's a personal tip. Each instrument behaves a little bit differently. And when you focus on only one, you get to see this a little bit better, which is for me why for the last year and a half, I've been focused only on trading gold. And after this video, go ahead and check out this one where I talk about my reasons why I only focus on trading one instrument. Number 3 is to master location. Now, direction tells you where the market wants to go. Destination tells you how far it wants to travel. But location tells you exactly where to pull the trigger. And to be honest with you, there are hundreds or even thousands of different strategies out there. Fair value gaps, order blocks, EMA bounces, VWAP bounces, the list goes on. And all these YouTubers or trading gurus want to tell you how their strategy or their course is the best. And the truth is, each of these strategies could work, but what doesn't work is trying to master all of them. The best traders that I know, the ones who are consistently profitable, they use the simplest setups. They pick one entry method and master it completely. They know exactly what it looks like, exactly when to take it, and exactly what to avoid. And for me, I love liquidity grabs. Remember what we talked about in step 2? Price moves from one liquidity pool to the next liquidity pool. And liquidity grabs are basically the market showing you their hands. It's telling you, I'm going to take all of this liquidity and then move into the opposite direction. So now clearly I have the direction of a trade, I have the destination of the trade. So all I need is a good location. And that is exactly what happened here with this 30-minute candle close. So as you can see, we have this 1 hour area here that I had dropped down here from the beginning of the day, which was this area that the price bounced from. And also we have this support resistance level. So if I go back here, you could clearly see that we had a rejection here, we had a rejection here, and also a rejection in this area and a rejection here. So this is a strong resistance that once the price pushed out of is likely to get tested. Now, these support resistance levels, they are not just concrete areas. Like the price is not going to be coming exactly to that area. So as the price was pulling back here today, I was basically waiting for some kind of a strong reaction in the direction of my bias for the day off of this area, which is exactly what happened here. We had a very strong 30-minute candle closure right above the session VWAP, and that is a candle that I used. That is the location. And the location of the trade is so important because I want my stop loss to be in an area where if it gets hit, my trade idea is invalidated. So that is where my stop loss is here after this strong 30-minute candle close. So I know that if the price for some reason went up here and then closed back down here, my whole trade idea is invalidated. And that's basically it. I had the direction for the trade, I got in the trade at a great location, and I had target, I had a destination, and that is a recipe for a great trade. Now maybe liquidity grabs doesn't resonate with you. That's okay. Maybe you prefer fair value gaps, order blocks, or some kind of a simple support resistance. And that's perfectly okay. The strategy really isn't what matters the most. It's your mastery of that strategy. And here's exactly what I would do if I was starting over. I would pick one entry method, just one, and study it obsessively. Go watch some YouTube videos on it, backtest it, forward test it. And remember, you don't need to catch every single move in the market. You just need to catch your moves consistently. So the step 3, which is the location, is pretty much your entry strategy. What gives you the trigger to enter a trade? Now, step number 4 is where most traders fail. They trade based on emotions, fear, greed, FOMO, instead of following a clear, repeatable plan. But having too many rules or too many confluences is just as bad as not having any rules. It leads to confusion, hesitation, and mistrade. So here's what I would do. Write down no more than 4 to 5 very clear, specific rules. Clear enough to follow under pressure, and strict enough to keep you disciplined. Your rules should include direction, destination, and location. Here's an example. Rule number 1, trade in the direction of the daily bias and the 4-hour direction. Rule number 2, enter on a 30-minute liquidity grab from a 4-hour swing high, swing low, or a previous day high or low. Rule number 3, take profit at the next liquidity level. Rule number 4, risk a fixed dollar amount on each trade. That is 4 rules. Now, this was just an example that I mentioned in this video. Your rules could be completely different, and it's rules that are tailored to you. Now, once you have your rules, here's what most people skip, which is back testing. You don't want to go right away and start going for challenges or risking your own personal funds. You want to go at least 6 months back and backtest it using your specific 4 to 5 rule criteria. Track every valid setup. Measure your win rates, average risk to reward ratio. And then once you go through backtesting of 6 months of data, you want to demo test for at least 30 days. Treat this like your actual account. Journal everything, and in that journal, write down, did you follow your system? Did you break any rules? Did you chase a setup that didn't meet your criteria? And this is what separates consistent traders from the ones that are unprofitable. And here's the truth. If you can't make money consistently on a demo account, you definitely can't be trading real money yet. So now you got to step number 5, which is go for a funded account. So by now, you should have your strategy down and be confident in your system. So this way, during the challenge, you're just gonna focus on your psychology and to not mess things up. Now, I have a whole video that goes into detail about my prop firm strategy, so definitely check it out after watching this video, link in the description. Now remember, the challenge isn't about making money. It's about proving that your system works under pressure. It's about demonstrating that you could follow your rules when there is money on the line. And the great thing about prop firms is that you could risk a little bit of money and get access to a larger amount. And that's something that I wish I knew about when I first started day trading. So as we talked about in this video, you want to be able to learn the language of the markets and get your strategy down to a very specific 4 to 5 rules. Once you have that, you backtest it, you demo test it, and then you go for that funded challenge. But most traders skip all of that. They see something on a YouTube video and they go straight for that funded challenge. And that, in my opinion, is a waste of money. So there you have it, guys, the 5 things that I would do to become a profitable day trader twice as fast. Day trading isn't a get-rich-quick scheme. It's disciplined hard work that 95% of traders are not willing to do. But if you watch until this part of the video, you're not like most people. You understand that trading is a skill that needs to be developed over time. It's not some lottery ticket. Every profitable day trader, every funded trader started exactly where you are. They had the same doubts, they had the same fears, and the same questions, but they followed the process. They stayed disciplined, and they didn't give up when things got difficult. So if you enjoyed today's video, go ahead and smash that like button. If you haven't subscribed already, what are you doing? Subscribe to the channel, join the family. The market is going to be here tomorrow, next week, and next year. It's not going anywhere. Focus on building the right foundations, and the profits will follow after that. Thanks for watching, and I'll see you in the next video. Peace.